So obviously, I think if you read some of the Bloomberg news, you really notice that inflation is a core problem not only in developed countries, even developing countries are facing that kind of issue. And you just look at US itself. I think it recorded last month. It recorded the highest inflation number over 40 years. That's actually very high. So inflation is going into double digit and it's going to be a cause of concern. And as a result, I think US is just going to increase interest rate to control the inflation. Now, why are we so bothered with rising interest rate? Because when you have high interest rate, that means generally your cost is going to go higher. And when you have high interest rate, generally the economy will tend to be slower because a lot of companies, they do not want to take bonds, they do not want to take loans because interest rate is high. So generally the economic growth will start to slow down a bit. So that will have an impact in terms of commodities. So really going forward, with inflation staying stubbornly high at this level, and interest rates expected to rise further, I think it's going to be a concern for commodities as well. This is just showing you, just yesterday, FOMC, Federal Reserve in US has decided to hike the interest rate by 75 basis points. Now, obviously, high interest rate environment is not good for the economy. But equities market yesterday rallied, even commodities as well. Reason being is because we just look at the tone of yesterday's meeting, it shows that US Federal Reserve is starting to probably slow down their interest rate hike going in the next few quarters. They still have to increase, but the pace is going to be slower. So actually, that's considered quite a good news for the equities and the commodities market. So if you are trading commodity space, if you are trading grains or you're trading a CME product, doesn't mean you don't have to pay close attention to interest rate because, like I mentioned, interest rate has an impact, across the whole board. Whether you are in equities market or you're in commodities, interest rate will have a big impact. So if you are, trading the market, watch out, especially when it comes to FOMC meeting, that will have a movement in terms of the market. So like if you compare commodity prices and treasury yield, you notice that when you have high interest rate environment, generally it doesn't really favor commodities. So going forward really is to look at how the treasury rates or the interest rate is going to play out. Are we going to see higher interest rate? If that's the case, I think commodities will likely be pressured because like I mentioned and explained earlier, high interest rate will definitely affect your economic demand. So that will also have a pressure on your commodity prices. Now, since we talk about grains market today, I think I'm just going to share with you some of the key fundamental factors that actually affect prices. Now, this list is not the full list. There's also other factors that can actually impact prices. So obviously, the first thing is demand and supply, basic economics. If you have high supply, that means prices will tend to go lower. If you have strong demand, prices will tend to go higher. Now, I've been trading commodities for quite some time. Seasonality is very important. The reason I say seasonality, or what it means by seasonality, is that if you trade corn or soybean or even wheat, if you notice that certain period in the year, especially during the June, July, August period, commodity prices over the past 15 years has been actually quite weak. Why is that so? Because if you just look at the late grain calendar, which I'm going to show later on, is that during this time, there tend to be a lot of harvesting. So once they harvest, supply is a lot. So therefore, prices will have to come down. So seasonality is an important factor if you are trading commodities because if you trade soybean, wheat, or even corn, you notice that June to July or June to August period, you tend not to go long. In fact, you try to find opportunity to short the market because based on historical data, you notice that these are the period that prices will tend to be weaker. Now, if you are trading CME product, whether it's corn, soybean, or wheat, you are in a way you are trading a very transparent product in the sense that there's a lot of data. If you are trading this grains product, every week we have data. So on weekly basis, we have the planting report. which is reported by USDA. So all this report is important because price will react. Imagine now you are planting season in US. If, for example, corn planting decided to be quite bad because of weather, there's a hurricane in US, you can see price will tend to spike up. So if you are trading the market, you have to watch out, especially key periods like now planting season in US. So I think as a trader, we really need to pay attention to these reports when it comes to planting reports, which is on weekly basis. Obviously, price of movement of cross substitutes are also affecting. So if you are familiar with palm oil, whether in Malaysia or Indonesia, you know that it has a close relationship with soybean oil in CME market. So you notice that whenever palm oil increase in price, normally soybean oil will follow, and vice versa. Now, crude oil is also important because when you have high crude oil price, normally greens market will be supported because you can use corn for ethanol, or you can even use soybean to biofuel. So a lot of with high oil price environment right now with $100 per barrel is actually more effective and more viable for governments to actually blend cooking oil like soybean oil or even palm oil with crude oil as a way to save their budget. So whenever you have high oil price environment, normally it will help. It will push soybean price higher as well because of the soybean oil. Geopolitics, it is something, especially US and China tension still continue. So obviously this is a big factor. But again, these are all geopolitics are more to midterm. You don't see the impact straight away. Unlike like those reports by USDA, those are quite immediate. Weather extremities, now this is something that is very common nowadays because whether you are a believer of climate change or whatnot, but you have to acknowledge that the weather is changing rapidly. So with weather, extreme getting very bad, normally price will be affected as well. Now, this is a green crop calendar which I shared earlier. Those are so if you notice that the green green boxes indicate the planting season. So corn, soybean, and wheat are in planting season right now. They are almost finishing. So crucially, the next 1 to 2 weeks is important, especially for soybean and corn because they are almost finishing their planting season already. So hopefully the weather is good. The weather, there's no bad weather. If there's bad weather, so price usually will spike up. If there's good weather, I think likely prices will tend to be on the downside. Now, harvesting for US market is usually starts in August, around early or mid-August for the wheat. Corn and soybean usually starts in early September. And now the reason I put it Brazil and Argentina because they are two largest soybean producer as well in Central America. And if you notice, their planting and harvesting season is the other way around. So Brazil and Argentina usually harvest during this time. So once US finish harvesting, they will be planting. It's the other way around. So in a way, the world will always receive constant supply of soybean. You don't have to worry, suddenly you don't have US soybean, where can you find? Because Brazil and Argentina can still continue to produce when US is on planting season. So that's in a way very unique. If you're trading the corn, soybean, or even wheat market, do take note when is a grain crop calendar because this will help you in terms of making your decision whether to buy harvest during this time. So now, once USDA, like I mentioned, is very transparent their data. So every week they'll publish a report. In fact, there's so many reports. Not all reports are important. The most important ones are like your planting report because it's planting season. But once planting season is over, normally we don't look at planting report. Progress report is also important because to make sure that is there any bad weather impact and whatnot. What is the most important out of this report by USDA is the monthly report. This is basically it tells you the supply and demand estimate. How much are we expecting next month supply or next month demand? Because as long as they foresee higher supply, prices will have to react on the downside. Or if they foresee higher demand, that means prices will have to go higher. So do watch out. I think in terms of monthly data, the World Agriculture Supply and Demand Estimate, the WASDE demand, WASDE report is the most important report to watch out for. Now, going back into a little bit on fundamentals, like I mentioned, I think prices are affected by the demand and supply. As long as you have strong supply, it's very difficult to see prices going higher. But if production is affected, supply is affected, I think there's a likely chance that we can see prices going higher. So if you just look at corn and soybean, I think this year looks like if weather is normal and there's no bad weather situation, it looks like corn and soybean is likely going to be higher compared to last year. But then again, it all depends on weather, because as long as weather doesn't have too much of an impact, we should see higher production this year. So if you see prices are going higher, it tend to have a ceiling, because with production rising, that will put a bit of pressure on prices as we go forward. Now, this is the planting progress. So like I mentioned earlier, I think it's important for us to take note as we enter into planting season. Is as crucially to watch any bad weather that can affect planting progress. Usually that will have an impact on your prices, and these are all on weekly basis. So if you notice, I think around by mid-August we're pretty much done with it. Then we'll wait for the harvesting cycle in US. So if you are trading corn and soybean, you have to pay close attention to this kind of report, because ultimately it will have an impact in terms of the prices. Now, if you are trading grains, it's important for us to look at stock levels. Although supply and export, which is representing demand, is important picture as well, but stock is equally very important. For the simple fact that if you have high stock, it's very difficult for prices to go higher. So just last year or just early this year, we saw prices of corn and soybean actually rally to record level, because the stock levels are actually very low. And with Ukraine and Russia in conflict, that actually push prices even higher. But obviously that has changed. I think the tensions are easing, and if you just look at stock levels, they are actually starting to increase. So going forward, if we want to expect where price is going to go, pay attention to stock levels, because if stock levels starts to increase, I think price for both corn and soybean will tend to see some adjustment. So I think stock levels is worth to pay attention to. If you're reading some of the reports, I think stock levels is worth to be tracked quite closely.